All right, let's talk about 2026. If you're an investor trying to figure out what's next, you're probably feeling two things at the same time: a whole lot of promise and a whole lot of pressure. And that's exactly what we're going to unpack today, your guide to this brand new, pretty complex landscape. You know, this image really nails the feeling for 2026. JP Morgan calls it promise and pressure. And I think that's perfect. It feels like we're on this really challenging journey, but one with some incredible rewards if you know how to navigate the terrain. So the question is, how do we actually do that? Here's how we're going to tackle this. Think of it as a zoom out, zoom in, then zoom back out approach. First, we're going to zoom out and look at the big picture, the new market landscape. Then, we'll zoom in on a fascinating case study, Amazon's huge bet on AI. After that, we zoom back out to see who Wall Street is picking. And finally, we'll wrap it all up with a simple, actionable investor playbook for 2026. Okay, let's start with that big, zoomed out view. There are really three massive forces at play right now that are changing the rules of the game for basically every investor out there. And understanding these is the foundation for everything else we're going to talk about. So here they are. First, no surprise, the AI revolution. It's just completely transforming everything, creating value in places we never expected. Second is something called global fragmentation. This basically means the old days of just finding the cheapest way to do things are over. Now it's all about secure, resilient supply chains. And third, the inflation picture has changed. We have to get used to it being structurally higher and, frankly, a lot more unpredictable. These three things are all tangled together, and they're really setting the stage for 2026. So, all that big picture stuff is great, but let's see how it plays out with a real company. It's time to zoom in, and we're going to look at one of the biggest players on the planet, Amazon. This is a perfect case study of a tech titan feeling the pressure to deliver on the massive promise of AI. So here's the core of the problem for them. In 2025, even though Amazon is a giant, its stock kind of fizzled out. You can see it right here, a gain of just under 7%, while the big indexes soared past it. That kind of underperformance, well, it lit a fire under them and set the stage for a massive, high-stakes gamble in 2026. Okay, now this is where the story gets really interesting. This table shows the financial pressure they were under. Just ignore the other lines for a second and look at that last one, the price to free cash flow ratio. It went from about 71 all the way up to almost 240. That's a huge jump, and it's basically a giant blinking sign that says cash crunch. So where did all that cash go? It went right here. This is the answer. Amazon is gearing up to spend over $125 billion on capital expenses. And that's just for starters. This number is the reason for that cash crunch we just saw. It's a truly mind-boggling amount of money, but it is all for a very, very specific reason. Just so we're all clear, CapEx is just a fancy word for the money a company spends on physical stuff, buildings, servers, you name it. And for Amazon, this absolute fire hose of cash is pointed at one target: building out the AI infrastructure for its cloud division, AWS, so it can dominate the next wave of tech. And that, of course, brings us to the, well, not the million-dollar question, but the $125 billion question. Is this a brilliant strategic move to lock in dominance for the next decade, or is it a reckless gamble that's just burning through a mountain of cash? And this quote from the Motley Fool, I think, just hits the nail on the head. It's the new reality. Spending this kind of money isn't just some aggressive choice anymore. It's what they call the table stakes. It's the minimum price you have to pay just to sit at the poker table in this AI arms race. To even have a chance to win, you first have to buy in. Okay, so we've seen the pressure cooker that Amazon is in. Now it's time to zoom back out. Let's see how Wall Street analysts are looking at this whole Magnificent Seven group of tech giants. Who do they think is actually going to win this incredibly expensive race? Well, the consensus price targets tell a pretty clear story. NVIDIA's out in front by a lot. Analysts see a potential 39% upside. But look who's right behind them: Microsoft and Amazon, with Wall Street projecting almost 30% gains for both. The message is clear. The Street believes their massive AI spending is going to pay off big time. And this slide really draws a line in the sand. On one side, you have the clear winners we just talked about, but on the other, you have the laggards. Analysts see way smaller gains for Alphabet and Apple, and they're even projecting a potential 12% downside for Tesla. You can see a very clear split in who Wall Street thinks has the right strategy for 2026. So we've looked at the big market forces, we've dissected a company's huge bet, and we've seen Wall Street's picks. Now we get to the most important question. What does all of this mean for you? Let's boil it all down into a clear, straightforward playbook. Here you go. 4 key strategies for 2026. Number 1, focus on the big dogs, the large cap leaders that are really driving this whole thing. 2, think about the AI supply chain. Don't just look at the glamorous AI companies, but the ones providing the essential stuff like power, chips, and cooling systems. 3, get comfortable with volatility. For a stock you believe in long term, like Amazon, price swings can be your friend if you use a strategy like dollar cost averaging. And finally, remember that global fragmentation theme. Look for companies built for resilience, not just pure cut rate efficiency. And that leaves us with one final thought, and it's a big one. We've seen the absolutely eye-watering sums of money these companies are spending. We've seen the pressure it creates. But as we look ahead, the real question you have to ask yourself is this. In this new AI arms race, is it possible that the biggest risk of all is not spending enough?